Today, folks, we're going to talk about what is being defined as the 2:30 p.m. stock market crash, or at least that's what people in my chat group from Patreon are calling it. But nonetheless, is this just a preemptive sell-off from the big hedgies to take those juicy Christmas gains before you can and before that long weekend hits? Is this some kind of bot algorithm, AI, that's just trading the markets? I don't really know, but we're going to break down the stocks that have had the biggest movements, the stocks that I know are still going to be very well off coming into 2024. And generally, I'm happy about this, and you should be as well. I like gloating about all them dollars we're printing, but at the end of the day, I want to top up my tax-free savings account at the beginning of the year, and I was so worried a rally would happen that I just invested early. But I really implore a sell-off. Come on, guys. Like, we want to buy some high yield still. Like, I don't want this to come to an end so early. Like, I love buying the dips. So let's take a look at the dips that are dippity-dipping today. And firstly, with the larger indices here, like the S&P 500, and this is why it's called the 2:30 crash, because leading up till about 2 o'clock, there was a bit of a sell-off, and then as soon as 2:30 hit, we had the worst drop since the October lows in the S&P, which is kind of staggering, and the headlines are going to run with this like crazy, especially after gloating about the market rally like we all were. But look at the NASDAQ, same deal, exactly. At 2:30, something triggered a mass sell. And when we're talking about a 1.5% movement in indices like this, like we're talking about tens of billions, if not hundreds of billions of dollars. Like, it's pretty staggering, right? And we saw a little bit of a lag actually in the Dow Jones, which didn't really start to see that sell off till about 2:45. So you had a chance to get out, I guess. But let's just take a look, because I was scrolling through stock Twits, and my mind was more or less blown by the stocks that were trading the most here, because really it's kind of crazy that across multiple markets, including the Canadian market, saw something very similar, but it wasn't treated the same across all stocks, right? Like, you're seeing some of the bigger stocks, the more quality stocks, not moving as dramatically. Hell, even Canadian Imperial Bank managed to stay green. Apple was only down about, not even a full percentage point. Same with Microsoft, Meta. But when you start looking at stocks like Nvidia, Tesla, hell, even crypto avoided this crash, which was pretty surprising to me. But you get into the hype stocks, your Palantirs, your Shopifys, your chip sector like stocks, it's kind of neat to see that those are just getting absolutely clobbered. So let's just take a look at the charts themselves. Like Tesla here, having not really doing much for the last 6 months, is just trying to fight to stay up as far as I can tell, because it's basically been a downtrend from the peak of July. And there's a lot of news, and I think most of this is Elon Musk driven. It doesn't matter how good your bot is, and everyone just cares about the fight between Elon and the Disney CEO, and now they're removing the app from the car. You can tell that Elon is taking a lot of personal stances against other companies that he owns, like Twitter, and bringing it into the synergies of Tesla, which I think is just a stupid idea. But hey, it's happening, right? You can't avoid it. You got things like Royal Bank, the Canadian banks here, actually holding up nicely. Like, they're not really down all that much. We saw some wicked gains. I mean, look at the rocket ship Canadian Imperial Bank just went on here. You look at the 6 month from that October low, it is now up 34%, bringing back 6 months of losses. And I still think it's at a fairly good buying opportunity here, and I'm hoping the rocket ship cools down, because we want to keep buying, right? Like, I've been buying through VDY, but as soon as I can top my TFSA up, I'll probably start buying these banks individually. Yet again, the banks always outperform the Canadian markets and pretty much keep up with the broader markets. So Canadian banks are where it's at, baby. But again, chip sectors, Nvidia, very volatile here. So if you zoom out, it doesn't even look like this is a big deal. Palantir, I think some of these stocks you got to be a little bit more fearful of when it comes to the higher valuations in Nvidia and things like Palantir, because when these trigger sell-offs happen, it doesn't take a lot for them to start hitting their new monthly lows. I mean, Palantir starting to retest this after hitting $20, which congrats, because I know a lot of people that rode this from the $7-8 range all the way to 20 and got out actually at 20. And I wouldn't be surprised if that's the peak, unless something really astounding comes out of their Q4 earnings, because again, you can tell that these stocks don't justifyingly deserve to be trading in the $20 range. And I'm not saying that as a bear. Like, I think Palantir has some long-term prospects, but I did a video talking about Vanguard's small cap value ETF, and when you look at the top holdings generating like 4x, 5x, in some cases 20x the revenue that Palantir is generating, yet Palantir trades at pretty much a higher market cap and a way higher multiple than all of them. And you start seeing the delulu nature of social media investors these days, right? But I'm just talking facts here. So I just try and spit the facts, baby. But look at like FedEx, another bellwether, which kind of concerns me a bit with how well Amazon's been doing. I'm really curious to why there's such softening demand in the shipping sector, considering how well e-commerce has been doing. FedEx announced today that they're basically going to be lowering their guidance, and it's really intriguing that with all the slowdown in traditional retail, and with all the pickup, the record sales going on Shopify and Amazon, the incredible growth they're still experiencing, yet FedEx lowering their guidance just seems like a bit weird, a bit eerie to say the least, and it might just be FedEx specific, something to look deeper into. You got Starbucks here still getting slaughtered because of their geopolitical stances and some of the issues that were going on, which honestly, I don't want to cause too much political stance, but anytime Starbucks has ever dipped Starbucks always has a controversy. Every major dip that has happened to Starbucks is related typically to some kind of controversy, in my opinion, whether it's the unionization, this, that, or the other, and they've always seemed to come back from it. So they're going to be fighting this uphill battle when it comes to these boycotts, but so we need to see how that pans out, and if they can continue to kind of regain some of their traction that they've always been able to get back, because people they're just ridiculous. I never bought Starbucks because I will not spend $5 on a coffee. It is beyond the most Delulu thing anybody will ever do. In fact, I was just making dinner at home and I was calculating the cost of what it was to eat a steak or a very nice salmon dinner, and the total plate would be like $6 or $7. And then I'm looking at what it cost me to eat salmon dinners out at a nice steakhouse, and it's like $40 or $50. So, I'm always like, it's just kind of crazy. It's a good treat once in a while, but daily you're just Delulu. Now, let's talk about Google, for example, here. I'm going to get a lot of hate for saying daily Starbucks drinkers are Delulu, but I don't care how rich you are. I'm never rich enough. I'll never be rich enough to want to drink Starbucks on the daily. I'm sorry, but I just want to talk about the two stocks that I still think are the most intriguing comparables, and the stock that did not sell off today. It had the pullback at 230, but again, because it rallied so much on the one day, I still think it has, the potential to be a good runner into the end of the year and probably into 2024. And that's because the comparables on Google versus Apple. I want to preface this by saying Google, I think, has more leeway to expand their business and margin than Apple does, because you're seeing it on things like YouTube. They're increasing the ads by like 30 seconds, and you're seeing 3 or 4 ad placements within that 30-second window. They're obviously coming down on ad blocker. They're trying to get you to sign up to Google Premium. They're doing so much to try and increase that revenue, which I think it's going to benefit them come this end of Q4 here. I know it. They're going to have a great Q4. There's no way around it, right? But what makes Google so indifferent to Apple, this is like comparing apples to oranges. I know they're two different businesses, but look at the net income. Google did $19.68 billion in net income. Apple did 22.9. You're talking about a $3.5 billion difference, give or take. I mean, Google is getting damn near close to eating Apple's net income lunch. I mean, they're really growing. But what's most intriguing is that Apple has $352 billion in assets, and I want you to pay close attention to this: $352 billion in assets, whereas Google, I know it's a little bit different here, but $365 billion. They have more assets than Apple does. And take a look. Google only has $109 billion in liabilities. Apple has $290 billion in total liabilities. So I think if you're comparing balance sheets and net income, that if you didn't know what these businesses were, and if I didn't know what these businesses were, I would argue that Google would probably be trading at the same value, if not higher, if we're just basing it on the balance sheet, right? So I'm very intrigued and think there's huge potential for Google, and I don't think any market pullback is a buying opportunity for a company like this. And again, even with these indices, right? Like, we need a healthy pullback. I want to buy the dips, and this is just setting up that further opportunity for me to buy, because I went heaviest on the heavy when the October dip happened, right? Like, that's when I was going just bananas. I try and go as bananas as possible when it makes most sense, right? Before the market just doesn't recognize that it's just too oversold. That's what we're going to see here again. I think people think we're going to see a continued sell-off into the end of the year, and we very well may. But I have a hard time believing with the recovery in earnings and what Q4 is probably going to present to us, that you just don't want to be buying the dips. Like, you need to buy them. You don't have a choice. You should be at all costs. Buy the damn dip. I'm just saying.